I think the day-to-day volatility will be there, and we're kind of going through a phase where everyone is trying to figure out the next leg of this AI infrastructure build-out and how the companies would be reporting, especially the hyperscalers. I mean, at the end of the day, everything comes down to the CapEx numbers for 2027 and 2028. And we'll learn about that when they report earnings, the hyperscalers. And there is some profit taking right now, but overall, I thought the IPO was well received in terms of, the first day bump that we saw in terms of a close. And the long-term investors do think this is a multi-year cycle for memory names. And even though they are cyclical and there is a fear around peak earnings, I think on the whole, everyone buys into this multi-year build out for AI.
It feels increasingly like everyone's taking their cue from the Kospi, from what happens in Korea, and that the tail is wagging the dog here. Is that the case, Mandeep? I mean, when you come in the morning, do you look at what's happening in Korea and say, okay, now I have a better picture of what's going to happen globally, because that sets the tone every day?
No, I mean, for me, it's just another data point where, I look at the futures, I look at how the markets have reacted. But at the end of the day, there are some data points that weigh a lot more for me. And the hyperscale CapEx guide is one of them. And if I know that all these companies are, raising their CapEx for next year, and we are into a third year of a 70% increase in CapEx, and if next year is going to be another 50%, then there is not much to worry about, at least for the next 12 to 18 months.
Okay, and it looks like some of those hyperscalers really don't report earnings until the end of this month. Tomorrow we're going to get the big banks reporting. We're also going to hear from TSMC and ASML, two big chip names globally. How do you see that kind of filling the vacuum between now and when the hyperscalers do report and give us a better picture of their CapEx plans for 2027 and beyond? Yeah,
I mean, TSMC reported their monthly number today, and we are easily tracking over a 40% increase year over year, and the seasonality was better than expected. So when you look at TSMC's results, which hasn't really used their pricing power like the memory guys have. So in the case of memory top line, you see a lot of pricing growth. TSMC, on the other hand, has been a lot more balanced in terms of volume versus pricing. And it's just a question like the durability of TSMC's growth, ASML's growth, and all of these memory guys, whether it's SK Hynix or Micron, have talked about raising their own CapEx. So that means ASML is a beneficiary of memory CapEx. And right now, everyone buys into this thesis that you have to keep investing, to keep raising their CapEx just to increase the supply by 15-20%. And even that would not be sufficient. That's what the SK Hynix chairman said is, we will double our supply through 2030 at a CAGR of 15%, but we'll still be undersupplied. So the demand growth will outpace 15 to 20% supply growth that these companies are investing in.
Okay. Again, the numbers just blow me away, dude. But I'm going to take what you're saying face value. If I'm a Meta or a Google or Amazon, do I want to put up a big CapEx forecast or not? Where are we in that play there? Does the market want to see these guys keep spending, or we kind of past that?
I think the market wants to see them spending, at the same time show some revenue lift to their top line. So in the case of Meta and Microsoft and Google, they want to see that cloud business get a bump, the core ads business get a bump from AI, and the AI contribution has to be very clear. So like Google Cloud growth, for example, has surpassed 50% now, expectations. Why? They were growing, traditionally cloud was growing 20 to 25%. That additional 25% plus growth is coming from AI. So similarly, you want to see that reflected in all the hyperscalers that are reporting that this is the AI portion, and hence we are raising our CapEx, and I think the market will cheer for that.